Good morning, everyone. I am back in Bulgaria here. I hope everyone is doing well. I'm going to be relocating it again, but for now, this is going to be the background for the next few days. I hope you enjoy the closet behind me. So, good morning, everyone. Hope everyone is doing well. It is Tuesday now. The week has already started. We've had some kind of downside movement already in the week. And I am looking for a bit more, right? I think that we are at that turning point. I think there are a few economic events that have been shaking up the markets, right? From yesterday, we have the Fed speakers that have been talking about what is going on for the end of the year, for the rate hike cycle to continue into next year and the potential for a recession. Also, getting a little more aggressive with the rate hikes and expecting that there is going to be a need for more um, rate hikes to come with more aggression from the Fed in terms of the tightening policy that a lot of people may be overlooking into the end of the year. So that's a decent bit of what had happened that caused some of the downside yesterday. We also had some of the news from crypto that we're going to be talking about a little on later today. We also have some stuff from the US, right? The US economy, we do have an important consumer confidence report that does arrive 10 a.m. Eastern today. We also have GDP numbers that are expected to come out tomorrow pre-market. So those are some numbers that everyone is pretty excited about and is looking forward to, along with the non-forms that come out at the end of the week that are going to give us a little more indication of the real strength of this labor market. So we also have the consumer confidence index that provides some insight into consumer assessment of the labor market as well as the business activity, financial condition, the people's willingness to spend overall, and more importantly, provides opinions on both the current state of affairs, the present situation index, and the future estimates, which is the expectation index, which are needed to make any type of investment decision overall. Now, if we take a look at the bigger picture, consumer spending accounts for more than two-thirds of the economy. So that means it's a super important aspect to gauge how individuals might behave in the near future. Banks, manufacturers, and retailers are also keen to see the changes in the index, which can inform them on whether to take additional financing, rethink the overhead, or advance/delay business investments. So among those, that also keep an eye on these figures are the government officials, right? Fed leaders who also factor in additional fiscal and monetary policy action that is needed to balance the economy. So there is a slight month-on-month fluctuation, right? That is considered to be normal, but the index changes of more than about 5% plus or minus in a continuous trend or direction can indicate a likely path of where the economy is headed. So if we get a very large figure that kind of is larger than the 5% expected fluctuation, we can see a little more of an indication of where we could be headed in the coming months. So the indicator has also been steadily decreasing since notching a score above 115 last December, bearing two readings. So in August and September, that prompted hopes of an uptrend, and today's number is forecast to come out at a reduced 100 from October's 102.5. Though any figure above 90 generally does reflect a healthier economy. So that's going to be an interesting number to watch today. This week is still full of decent news events. We have the GDP prelim numbers that come out tomorrow morning. We also have the non-farms at the end of the week. And this is on the back of a holiday week, right? A holiday weekend that prompted markets to close on Thursday and also have very, very slow trading on Friday. So talk about crypto, right? There has been a lot of news around crypto with FTX, also BlockFi. We haven't really touched too much about it and on it because it's not really that big of an interest here at TPA, mainly focusing on the equities and the derivative side of things. But it's also, it does help us gauge what is going on overall in this crypto space and how it can affect the market, right, with all these liquidity issues. So cryptocurrency lender BlockFi has filed for Chapter 11 bankruptcy protection in the U.S. in an effort to stabilize and restructure its business following the abrupt downfall of crypto exchange FTX. So major digital tokens like Bitcoin and Ether were dragged lower by this news, but pardon some of the losses in the overnight trading. So BlockFi, which is still operating its business, said it will focus on recovering all obligations by its counterparties. And though recoveries from FTX are expected to be delayed given its ongoing bankruptcy processes. Now, one thing that does tie into this, right? A lot of these companies have been exploding under a massive liability side compared to the cash on hand, which can be translated to a lot of individual stocks as well. One of the names, right, that really sticks out, obviously, there are a bunch there. You could take a look at them. One of the names that sticks out with liabilities that outweigh the cash on hand very heavily is Beyond Meat. So BYND is one of the names that I think you should look at for a longer medium term short, right? Things like Coinbase as well that are tied in together with these crypto spaces have been negatively affected recently, and we could see some continued downside. So if you're looking at some individual names rather than looking at the cryptocurrencies themselves, those are two. Well, Beyond is not necessarily one of them. It's just one of the names that I thought of based on if we're talking about liabilities versus cash on hand. But Coin, right? That could be one of the names that you're looking at to kind of take advantage of what's going on here. So BlockFi is estimated to have over 100K creditors. One of its largest creditors included FTX's U.S. business name, West Realm Shires, with $275 million unsecured claim, while Ancora Trust Company was the lender's largest creditor by a wide margin with a $730 million unsecured claim. Reports that suggest that BlockFi has begun slashing costs in preparation for a restructuring, including warning two-thirds of its employees about coming layoffs. So still a lot, right? Two-thirds wild after claiming Chapter 11 bankruptcy. This is a whole thing. I don't know the whole story, right? It's all unraveling like we've seen with FTX. BlockFi, which received an outsized credit line from FTX earlier in 2022, was already forced to suspend client withdrawals earlier in November due to the uncertainty surrounding the status of Sam Bankman-Fried's crypto empire. However, even before the collapse of FTX, BlockFi was struggling to keep afloat following regulatory troubles and a broader market downturn. Crypto lender rival Nexo reportedly offered to buy BlockFi for $850 million in July, but BlockFi turned that down in favor of a bailout with FTX that never went through due to the recent liquidity crisis. So we have to keep that in mind. It's interesting to keep an eye on all these crypto spaces. I'm honestly not that involved in it. Not gonna lie to you guys, but it's still unraveling pretty well, and it's still interesting to read even online what is going on. Another aspect to this, right? In the U.S. economy, we have rail strike, right? President Biden is imploring Congress to intervene in stalled negotiations between rail unions and operators to prevent a strike ahead of December 9th. That is the deadline, and the move would end a long-running labor dispute between the country's biggest freight railroads and more than 115,000 of their workers by passing a joint resolution under the Railway Labor Act of 1926. So that would force employees to accept the contract approved by Presidential Emergency Broad and their unions, which was set up to mediate the dispute this past summer. So we saw that, right? The 5-year agreement that resulted from the previous discussion offered railroad workers a 24% increase in wages from 2020 through to 2024, and it also granted an additional paid day off on top of existing vacation time by sticking points remain over work schedules and paid sick time. So, by some estimates, the railroad in the U.S. impact a, th- about a third to about 45% of all freight in the US, meaning there can be a knock on effect for many industries that could result in another inflationary threat, right? If those stall, if we're about 50%, between a third and 50% of the transport and the freight in the US, right, that becomes a supply chain issue in itself. And the inflationary effects are going to continue, which would in turn prompt the Fed to get more aggressive with the quantitative tightening. So that's something to consider. We're going to have to watch how that unfolds on December 9th. Let's see how we go from there. And with that being said, let's talk about a bit about these markets. We had a pretty strong downturn yesterday after a gap lower. We continued the downside trend here in the S&P. Just talking about futures here this morning. What we have is a move. We have a very big fat distribution block under 39.76. 39.76, we've accepted below that. We actually retested that level and we dropped about 10 handles before we got into the mid 60s for a slight little pop. So I'm going to be watching to see if the sellers come in at the 76 again, but a huge pivot, 39.88 to 90 on the S&P 100 futures. That is going to be a large pivot for prices to hold under, right? Looking for sellers to actually act at that level to kind of push it lower. If we do get back in that space above, the buyers are going to be fairly strong. So also keep in mind the 76, 39.76 is going to be a key area. Below that, we have the 69.68 region. And of course, yesterday lows, 39.60 to 58 is going to be the bottom end of this week's distribution naturally. So watch for that, and we'll see if we can break those areas. I am leaning a little more to the bear side, but of course, right, we're going to have to trade those levels and those pivots. With that being said, I'll see you guys tomorrow. Thank you for watching, and take care.